All right, we are live. Good morning, everybody. Welcome to the stream. I'll let a few people join in here, and then we will get this thing rolling. I don't know why my Do Not Disturb was on. Hope that you guys are having a good day. What's up, BR Baller? How are you, man? Doing all right? Hope that you're doing good. Just gonna let a couple people join in. I know I said I was gonna be yeah, if you want, sure. Let me see. I'm gonna do the portfolio update, and then once I do the portfolio update, I will send the link here in the chat, and then I'll let people join in. I just want to get this portfolio update out of the way because I know people have been messaging me about it. Why I'm not doing it? So I'd rather do it live. When the market's open, or just do it like live in general. I think it's just better to do it that way. And then people can go back and watch it if they need to. So yeah, we'll just looks like we got 21 people in here right now. Just a couple more minutes, a minute or two, and then we'll get ready for this portfolio update. But how's your guys' portfolio doing from your side? You guys doing all right? The only thing I've really done today so far is just something in my girlfriend's account here. So that's it. I just sold some MSTX put credit spreads in my girlfriend's account. Close some Google put credit spreads out. Yeah, so basically my plan is we're gonna do this portfolio update, and then at the end we'll do like a Q&A session. I'm hoping this will be like maybe like 30 to 45 minutes, maybe an hour. We'll see. It depends on when the girlfriend wants to go to the gym, because she's doing something on her computer right now. So as soon as she's done doing what she's doing, then I'll probably have to end it. That way we can go to the gym. So. All right, cool. I'm gonna go ahead and share my screen here. All right, so here's the portfolio currently. We're sitting at $93,509. So we're getting pretty close to that 100K mark. We're like ever so slowly inching there. We were up pretty good pre-market based off that tariff news that Trump's tariffs aren't going to go into effect. And then obviously because of my covered calls and some other stuff, the portfolio's kind of dropped a little bit throughout the day. But for the past week, we're basically flat at 0.34%. The month, we're up 15%. And the last 3 months, we're up about 28%. Year to date so far, we're up about 29%. So 29% compared to the S&P. So let's see how much we're beating the S&P by. And we're beating the S&P. The S&P's flat, so we're basically beating the S&P by close to about 30%. So that's obviously really good numbers. We know that the strategy that I'm using is working. And if you've never been here before, basically my strategy is I sell puts, I sell calls, I collect premium, and I roll when it makes dollars and cents, baby. You already know. So we the open positions here are on the right hand side. I'm kind of like in a lot of stuff, but it'll all kind of make sense. I'll kind of explain all the stuff that I'm in as we go along. So HIMS, I am bullish on HIMS for the long run. I've gotten in and gotten out on HIMS a few times already. So if we look at the wheel details here for HIMS, we can see like HIMS 1. This was the first wheel and deal I did on HIMS. I still actually have an open put credit spread that I'm getting ready to close. You can see that I have that HIMS put credit spread right here. I opened those like last August. And if we scroll down to that play here, here's that put credit spread. You can see that we're up 100%. So the total return right now on that is basically about 4 grand. So as soon as these positions close, this total wheel and deal will be like, let's see, basically $6,000 in the green. Yeah, I will share my Google Sheet that I use. This Google Sheet, actually, I'm going to make a video on it, probably today, actually, for YouTube, how to use it, and then I'm going to put the link for this Google Sheet into that YouTube video. That way you guys can go back and watch it if you need to, and because it is kind of a little bit intimidating at first, but it makes sense over time. So anyway, so we're on the second reiteration of my Hims wheel here because I had shares that were assigned and then called away. Now we're on my Hims wheel 2 right here. So right now we were assigned at 100 and I'm actually acquiring more shares because of this right here. There is a pretty good cup and handle formed on Hims. Go ahead and shrink that down. So some people say, oh, cup and handle. Some say double top. I don't know. It can go either way, but I'm kind of confident that this is going to end up breaking out to the upside. I think Hims is a really fast growing company, and I think that investors are seeing value in it. So I really do think that this will end up breaking to the upside. But if I'm wrong, say la vie. We're making money either way. So Hims, I have a $35 call, covered call on them, which will get my shares called away, at 35, but that's okay. We're acquiring more shares. I bought an extra $25 or an extra 25 shares of Hims the other day when it dipped. TSLL, we're running the wheel on TSLL. We've done it a few times already here. Let me see if I have. Oh, TSLL1. Yeah, so this is the open trades here on TSLL. You can see the unrealized profit loss over here is $3,512. So once all these shares end up getting called away and everything, we're gonna be up a pretty decent amount on this TSLL trade. DraftKings, I really like DraftKings at these levels. Let's check DraftKings here. You see we've sell puts, and then we also just opened some put credit spreads for the future. So DraftKings, I think, will end up being a really good play for the future. A lot of people are getting involved in sports betting, and it's becoming very easy off people's phones. So I really, I'm kind of bullish on DraftKings for the future. NVIDIA, obviously, whenever NVIDIA tanked, we sold puts on NVIDIA, and NVIDIA, whenever, the tariff announcements came and the entire market sold off. I mean, pretty much a lot of these plays that are in here right now are puts that I sold back when the market had a kind of a big dip. So AMC, I'm trying to actually get AMC called away. I don't necessarily want to be in AMC anymore. AMC was something that I did whenever I first started doing the wheel, and I've basically sold puts, sold calls, sold puts, sold called over and over and over again, and now I'm trying to just get out of it at 350. I collected like over $500 for these short calls, so if it doesn't get assigned, then we'll just end up bringing the cost basis down, and I'll sell calls again on AMC. Carnival, you guys know that I like Carnival. Let's look at the wheel for Carnival. So we've got you can see I've got three things here on Carnival. I actually don't know why there's three. Is that the third? Did I get it? Have I done it 3 times already? That's actually crazy. Yeah, I guess so. So on wheel 1, you can see that on Carnival we made about $1,800 selling puts, selling calls, collecting premium. These are all the things right here. You can see assigned. I purchased shares. I had shares called away, but you can see put, call, put, call over and over and over again, just collecting premiums and eventually making about $1,800 on that trade. Wheel 2 made about a little over 800. Same thing, selling puts, selling calls, collecting premium. And now we're on wheel 3. So we have 5 open puts at the 22 strike, and I'm really bullish on Carnival for the future. And I think that this will end up being a very good trade for the future. And like the good thing is, guys, like I said in the past, like yes, it is nice whenever these expire and you get to keep the money. But the thing for me is like I'm selling puts on stocks that I want to own at price levels I wanted to buy the stocks anyway. So even if it doesn't expire and it goes in the money and I have to buy the shares, it's a win-win either way because I would have bought those shares there regardless. So it's a way for you to keep some money coming into the account while buying shares at a price that, that's cheaper than when you're looking at the stock. Or it can be even at the same stock price, but you're just collecting money for it. And you're saying you're going to buy Carnival a month from now at that level, and you can collect money to do that. Celsius, we all know this is going to be the first time I've talked about Celsius. If you didn't know, I actually ended up letting go of my Celsius shares, and here's why. I was assigned on Celsius initially at $71. I was selling puts, selling calls, averaging down, selling calls to bring my cost basis down over and over and over and over again. And I eventually got my Celsius shares to the point to where I was almost at break even. So from $71 all the way down to basically the lows, via selling puts and calls, I was able to get my total loss whenever I closed out this trade on the 16th for only $312. The reason why I closed it out is because at the time I had covered calls that went way deep into the money. They were the $30 covered calls for May 16th. I had the option to get them assigned and I'm down $300 on this full trade, or I could have rolled it out to like September and made a couple $100 in option premium. So instead, I would rather have released this money, taken a $300 loss on the trade in total, but released $27,000 in option premium, and by me, or not in option premium, $27,000 in cash. And by me doing that, I basically allowed myself to collect way more than $312, and I just sold more puts on Celsius the other day for a total credit of $115. So we've already cut that loss in half via collected premium in one short put on Celsius. So that's why I did that. Like I said, sell puts, sell calls, roll when it makes dollars and cents. In that scenario with Celsius specifically, I hated to let it go because I had 900 shares. I had a lot of shares of Celsius, but it didn't make dollars, and it definitely didn't make sense keeping almost 30K, which is like a third of my portfolio, tied up for like 4 months to collect a couple $100. Didn't make sense. That's where the sense part comes in. And the great part about this strategy is that you're able to sit there and decide. You're like the dealer. You're able to go, I'm going to let them get called away. You're the one that's making the decisions. It's not like you're gambling. You're not sitting there and going, buying a S&P 500 call, and then if it doesn't go your way, you're like, well, shit, I just lost all my money. In this scenario, you have options. You can let it get called away. You can roll it. You know, you have the ability to mold, your decision making, and you can sleep well at night. And that's why I love this strategy. So Celsius gold call credit spreads. I think gold is just a little overbought right now, so that's why I sold call credit spreads on this. These are like basically at the money right now. They have till 620, so we collected. Let's see, we collected $24 a piece on this, so whatever 24 times 20 is, decent amount of money for call credit spreads. Let's see exactly how much. I don't want to blow past it. So I don't really do a ton of call credit spreads and put credit spreads, but I do it whenever I think that like a stock is too expensive to sell puts on, and I don't want to tie up a lot of collateral. Like I did it for DHI, DR Horton, and we'll talk about that here in a minute. But basically, I'll sell a call credit spread or a put credit spread whenever the share price is too expensive to own the underlying, or I'm not confident in the play enough to lock up all that money in collateral, basically. So let's see, on gold we collected, let's see, credit, debit, well, what the hell? What was, if we go into gold here, what did it say? I don't want to do the math, that's why. So this right here, average credit. Okay, whatever. 24 times 20. $24 times 20. That's how much I collected. Not doing math right now. Too tired for that. MSTX, triple leveraged. Lots of good premiums there to collect on MSTX. I have a $32 put, $30 put, and then I also buying shares outright. Currently, as of right now, I have 50 shares that we are up on as of right now. You can see that right there. Riot, I just kind of did this play because I didn't know what else to do. Kind of dumb. Wish I didn't do it, but oh well. It's already there. I don't really know enough about these Bitcoin miners, and to be honest, like when I look at the Bitcoin miners, I just see Bitcoin going up and to the right and the miners not. So it's kind of hard for me to justify selling puts on stuff that is like not really going up into the right, I guess. Like there's people on X that are very confident about these Bitcoin miners, but like they've been around for a little while now and all the share price has done is go down into the right. So I don't know. I don't know if I once this riot plays up, I don't know if I'm gonna keep selling, Bitcoin miners, selling puts on Bitcoin miners, but oh well. SOXL, if you guys follow me on X, I was very bullish on SOXL. I am still very bullish on SOXL, and it's a triple leveraged ETF based off semiconductors. You can see right here, this is this trade right now. You see overall profit and loss. That's not accurate. It shows that because the play is open currently. You can see these two invested. You see how it says assigned, assigned. It's because they haven't gotten called away yet. That's why it shows that. But there's the unrealized profit and loss. That if I was to close the trade out right now, that's what it would end up being right there. So SOXL, we were assigned at 1650 and 1850, and we were selling calls, selling puts. I'm in this trade for the long run, so we'll end up being green on this trade down the road because I think SOXL really has some upside potential from here. HIMS, I sold a HIMS 48 put because I'd love to own HIMS at 48 as well. Let's see, Dutch Bros. I've been in Dutch Bros for a while now. I'm pretty green on Dutch Bros. That's kind of a longer term hold for me. I ended up rolling these out until, let's see. So the expiration's July 18th. So we will revisit on this Dutch Bros play by the 18th. But as of right now, I'm up about 7.5K on this position. DHI, DR Horton. I've talked about it a little bit before, but DHI sold put credit spreads on. You can see this is the weekly chart for DR Horton. You can see that there's this pretty good uptrend line here. This is all the way back down here to like 2020. And so it's kind of at a lower point in time. DR Horton's $117 a share. So instead of me selling a put on DR Horton, I ended up selling put credit spreads, and that's these right here. I sold. It ended up making me about like $6,000 something or so. Or I didn't make it, but I collected like $6,000 or so in option premiums on this trade alone. You can see it was a $245 credit for 25, so 245 times 25. That's how much credit I collected. And these expire in January 2026. Obviously, has a lot of time on the contract, so it's got time to kind of fester. But I really think that DR Horton, like I live in Dallas. And the home builders out here go crazy. They're building lots of homes. A lot of people are moving here, so I'm very confident in this DR Horton play. Let's see. DraftKings, there's a put credit spread for DraftKings as well. SOXL, I had to end up rolling some. Whenever the market tanked, I ended up being dumb and made a mistake. Like, I'm always learning. Like, even though I do streams and do Twitter and I've been doing this for a while, I still make mistakes every now and then, and I sold calls against my SOXL shares whenever they were down in the crapper. But the good news is that even though I made that mistake, I'm able to still, roll out and up in strikes. I think it was like the $12 strike that I sold the calls against. So now I went from 12 to 18, so that's a $4 share price appreciation, per 100 shares. So that'd be $400 basically for each 100 shares I have, and that was on 200 shares. So that's $800 of increase basically in share price appreciation as long as SOXL is above 18 by January 16th, 2026. The problem with that though is that I lock up basically 3,000. What would that be? $3,600 of basically cash in SOXL until then. But I'm fine with that. That's a very small amount of money in comparison to my portfolio value. So if that's what it takes for me to lock in the win, then that's what it takes. And in this case, like I said earlier, when I roll, if it makes dollars and cents, in this case it's making me $800, and it makes sense because I lock in the win. Grab, very bullish on Grab. For the long run, I have 50 naked calls till 2027. You can see that those are up about 8% right now. So yeah, guys, that's pretty much the portfolio update in a whole. Here's the current shares I'm holding now. I have some cash still in my account. I've got 27.5K of buying power available for the future. So kind of just waiting on some plays. Market's kind of like wishy-washy right now. So I'm really not confident, on entering anything right now. But if something slides across the desk on Twitter, then I will be, more than happy to take the trade if it comes across the desk. But as of right now, I was looking all this morning, and there's really nothing that's in my watch list that I'm like, oh yeah, I want to take that trade real bad. So anyway, that's the portfolio update. I'm gonna go ahead and I will catch up with you guys, and then I'll put the link down in the chat if you did want to join in on the stream. So we got BR Baller in here. I know that. We got Ant. Yo, what's up, dude? How are you? Let's see. Sold $8 CLSK and $12 cash secured puts for July today. Hell yeah, man. There you go. Make some money. Touched base on that. Sheets template. I'm going to make a YouTube video on my Google Sheet, and then I will share the link in there so that you guys can use that. I do not have a Discord. I may make one in the future, but as of right now, I kind of use my Twitter for doing that, basically. But people have been bugging me about it, so I may or may not do it. Something that I'm actually working on right now, though, is I'm trying to, and you guys let me know what your thoughts are, but I want to make a subscription thing for X. And I've got to boost my account and get like 5 million impressions or whatever. I was at it in the past, and then I was able to do subscriptions back then, but this idea didn't pop into my head until now. I'm going to do like a subscriptions thing, and I've always been against subscriptions, like, charging people money for stuff, but this is different, I promise you. I'm going to get to my point here in a second. Because it's like, if you're so good at trading, and you make all this money, like, you should be doing it as a hobby. You shouldn't be asking people for more money. People that are trying to learn from you. You shouldn't be asking people for $5 or $10, whatever that number is. If you're so good at trading, that's what I always thought. It's like, the dude's posting screenshots of him making $1 million on a trade. Why would you pay him a $5 subscription? I don't know. That's my thought on it. Anyway, I was like, well, instead, what if we did this? What if I did like a $5 subscription on X, and I made it to where everybody, that subscribed, put in $5, and then towards the end of the month, I will do a poll via the subscriptions to see if we want to do a giveaway for a group of people or to a single person, and based off of that, all the money that gets added up in the subscriptions, whether that's $1,000 or $10,000 or $50,000, whatever that number ends up coming to, we would give it away. And that way we can grow the channel, grow the portfolio, get more people involved in selling puts and selling calls in this strategy. And then also at the same time, get the opportunity for people to grow their portfolio via, maybe spending putting $5 in for a subscription, and then they'd do like a group giveaway or a single giveaway for, like tens of thousands of dollars eventually if it got up to that point. It probably wouldn't be that much in the beginning, but, $1,000 is $1,000. So either way, I think that'd be something really cool. So I'm going to go ahead and put, let's see, I'm going to put this link here you're not going to see it if you're on Twitter, but you'll see it on YouTube. So that's the StreamYard link there if you wanted to join. I think with this StreamYard subscription, we can do like up to 4 people at the same time, maybe. I think so. I got my cold brew coffee here. Getting ready to go to the gym here soon. But that should be the link right there if you did want to join. So yeah, guys, feel free to ask any questions you have too in the in the chat over here. If there's a chart you're looking at, I can look at the chart for you, or just if you have a general question about the business. And I'm always looking for plays too. Like I said, I've only got a certain amount of stocks in my watch list, so I can't see everything. Yeah, I do work full time, actually. I'm trying to use this as a way to retire, but yeah. All right, so we got BR Baller in here. What's going on, bro?
What's up, bro?
Welcome to the stream.
How you been? It's been a while.
Yeah, I've been good, man. I've just been working away, making YouTube videos and selling options.
I've been watching. I'm a fan. I'm subscribed. Of
Oh yeah, well I appreciate that.
course, of course.
Yeah, man. The YouTube's actually going pretty good. It's going pretty good so far.
It's just impossible to make money on it, bro. So like even on YouTube, I mean, shorts are the best for views, but like long form, bro, it's so tough.
Oh yeah, I'm not even interested in it about making money off of it. To be honest, like I'm just doing it as a hobby. If YouTube made me $0, if Twitter made me $0, I wouldn't even care. Like I do it for fun. Um, I have no interest in making money off of it because if I'm good at what I do, then I shouldn't need the
Yeah,
money
you don't
off
need
of
the
Twitter
income.
or
Exactly.
YouTube. So it's more of
For
it's
fun.
more yeah, it's more of for fun for sure.
So what was I gonna say, bro? What do you think about the market? It's been going crazy.
Yeah, a little bit. It's kind of wishy washy to be honest.
Yeah, because I thought we were gonna rip after the court blocked the Trump tariffs, but then Trump, of course, disputed it. So now I think that's what happened with the pullback a little bit. We're seeing.
Yeah. Yeah, I'm not
Yeah.
sure what's gonna happen to be honest, because obviously, like a lot of what Trump ran on was, hey, pun intended. Tell me if that fixed it. Yeah, a lot of what he ran on was these tariffs. So I'm interested to see if I'm interested to see what's gonna happen. To be honest, like it's so back and forth. Like I feel like this is great for my strategy and just like people that play like these dips and rips and stuff in general because it's so easy right now to like whenever the tariff news happened and the market tanked. That was like the easiest like buying opportunity ever.
Bro,
Like,
I had a friend, I swear to God, I had a friend that like sold the stock TSM? Yeah, he was like he loved that stock. He bought it like at 200 and then he sold it at 130, the literal low because he thought Trump was going to like destroy the market. And now he's so pissed after seeing everything rip and I feel so bad. I saw his account and I just felt so bad for him, bro. Like that's when you should be buying. I told him not selling. Like you buy it during this.
yeah, yeah. You have to flip your mindset from you have to flip your mindset to red is good. Like red days are the good days. Those are the opportunity days, especially
Make
like the
money.
deep red days.
Of course. That's how you get rich.
Yeah, and I try to when I sell puts, I try to only sell puts on red days, and when I sell calls, I try to only sell them on really green days.
Exactly. That makes sense. That's the best thing to do. I mean, this market with the IV is the best for you. It's the worst for me because I'm buying options, but you're
Yeah,
collecting
yeah,
premium. Like,
you're on the inverse side. You're buying options.
bro, it sucks for me, but remember I told you about General Mills?
Uh-huh.
Bro, you should have got in.
Oh yeah, why?
It's
Why is
making
that?
money, bro. I mean, it's the best stock. It's the only stock that's gonna make people rich right now. It's the best opportunity. I looked at every other stock, and no other stock is gonna make people rich other than this one. I swear to God. Like I looked at everything. Look at how much shares hedge funds bought over the last quarter.
Uh-huh.
I'm telling you, like if you, but I don't know if you should do spreads on it. I would just buy naked calls if I were you. To be honest with you,
Yeah.
that's what I did. I bought the 50s in 2027, and the I think I'm the last time I checked, I was up like 7 grand. But I'm not even selling. I don't even care about the dollar amount. I'm looking to get this out at $60 a share.
Yeah. Why wouldn't you just ride it?
Uh, no, because it's a trade. It's like a swing trade.
Oh, okay. So you're just swinging it to 60?
Yeah, that's what I've been doing with all my trades. Like because I used to do what you're doing. I used to just get premium, and then I realized like it for me, it's just not gonna work if I want to do this full time. Like I need a big paycheck every
Uh-huh.
often, you know. So then I did the first trade on Comcast, made good money with that. Then American Eagle, and then Novo. Remember Novo?
Uh-huh.
Bro, Novo, I was down 20 grand. And then 2 weeks later, I closed it out for almost 1,000 profit because that's how fast the options move because it was 2026. And then now I'm in General Mills. If I lock in this win, I'm 4 for 4, which means I never lost. I hope I can keep this record.
Yeah. Yeah, and how big is your portfolio?
So in Robinhood, I have 170K. And then in my Merrill Lynch account, I have 152K. It went down a little bit.
Uh-huh. Okay.
So I'm trying to retire by the time I'm like, I just posted, I don't know if you saw on Twitter. I'm trying to retire. I want to retire this year. I'm sick of the stress of this. I hate the stock market. I just want to retire and then leave, close all the accounts. I swear to God, I don't want to do this anymore. I hate it.
Yeah. Yeah, I don't know. With what I do, I think it's pretty stress free. I want to retire too, and do my full time job a lot less because my full time job is extremely stressful
But you make good
mentally.
money. You make more than way more than the average, which is good.
Yeah, but yeah, I make a lot of money, but then at the same time, it's extremely stressful.
Yeah, no, no, it's true. It's true. That's true.
Yeah, I mean, I'm trying to also as well kind of scale back and use the stock market as a way to retire basically from doing that because for me, I feel like with what I do, it's pretty stress free for the most part.
It is the only thing I didn't like about this, like about the selling puts and the premium. The only thing I didn't like is okay, like there's two things. Number one is if you want to do it full time, like I'm trying to do it full time, I don't know, maybe we need to have like how much, $5 million, like whatever TJ's doing. I mean, that's like you need to have a lot to do it full time, as
Yeah.
like, and then
Well, yeah, TJ's portfolio is also like massive. Like he's making like tens of thousands a week. That's
and
that
losing though, he also loses
He
sometimes. But
could,
yeah,
he could, he could, he very well could. But
yeah,
the premium that he has flowing into the account is way more than what the average person would need to live off of. Way more.
yeah. But also, I think he's managing other people's money. But pun intended said, show him how you can retire. But pun intended, there's no way you can retire from 300K. That's like nothing in the stock market. That's like pennies.
Yeah.
I wish I could retire off that.
I don't
I
know.
would.
Let's
I would
see
have closed
how
it.
much have I made off my portfolio in the last year. This is basically 1 year of option premiums. 41.3K.
That's crazy. That's really good. That's realized though. That's realized.
Some of it's realized and some of it's unrealized. So basically, all the way up until about uh, where is the close? Basically until about these April trades right here. This
Yeah.
AMC call might be the last one, so it's probably like 37K. I don't know, 38K.
Hmm. But that's still good. You're actually doing better than me because you're up 30% year to date.
Yeah,
I'm only up 7%, but we're still both beating the market, which is good.
yeah,
The market's weird this year.
yeah. I'm up 29% year to date,
That's
basically. Yeah,
great, and that's just from selling options. That's
yeah,
crazy.
yep. Yeah, I mean, if you time it like with what I do, like I'm kind of like moving to a more methodical, because like what some people do, like with what TJ does, I think, and I could be wrong, I could be speaking out of my ass. Like if TJ's watching this right now, like I don't want to say something that's not necessarily true, but like I feel like a lot of people will sell options on stuff, like sell put options on stuff, just to keep like premium flowing into the account. And I'm not saying that he does that, but I feel
Yeah.
like if someone goes and looks at like the TSLL chart and goes like, oh, like I want to own TSLL, like right now it's at 16, like
Yeah.
let's just say like somebody was like, oh, I'll buy TSL at 15. But then in reality, like you could have just waited a little while because the RSI is like way rocketed to the top. Like if you see this chart right now, like probably buying TSLL at 16 and some change or selling a put option at 15 and some change might not necessarily be a good idea. Like it'd probably be better to see this RSI fall back down to the downside before you sell puts on it.
Yeah. Yeah, of course. And with the amount of, I mean, even like realistically, with the amount of money he has, he could just get interest off it and be done. I wouldn't even be doing this if I had that much money.
Yeah. Yeah, I mean, if you had $12 million, you could definitely just plop it into, a bond or something like that. But
Yeah, I would close the Robinhood account. I wouldn't even need it at that point.
yeah, but then what's the fun in that?
But then you're chilling like that. I mean,
Oh
bro,
no, yeah, for sure. There's
the market's
definitely like multiple ways to look
the
at it.
market's rigged anyways. It's all for the insiders. We're just trying to chase it. At the end of the day, it's all for the big boys. But as long as we can try to make a little bit of money for ourselves, it works.
Yeah, yeah, it's definitely if you don't know what you're doing like 100%, like if you're not somebody who's done it and made a lot of mistakes and learned from your mistakes over a period of time,
Yeah.
it's definitely rigged against you.
Yeah, of course, 100%.
Because
100%.
if you're somebody who has like 99+% of people who when they see red they sell and when they see
Like
green
my
they
friend.
buy,
Yeah.
If you have that mindset, then
You're
yeah,
screwed.
you're gonna lose for
Yeah,
sure.
100%. 100%. You
Because
buy in the red days.
yeah, because most people chase for
Yeah,
sure.
like my friend, and he doesn't even want to look at the market anymore.
Let's see, pun intended said, would you hedge your portfolio if I was wheeling Nvidia and SoFi with 100% of the account? I mean, I think I would always hedge my portfolio regardless. Um,
100.
Especially like regardless of the percentage value. Like you can see, like with all my stuff here, except maybe like this 50 shares of MSTX and then the 25 shares of HIMS, everything else except that stuff is hedged. But then at the same time, I guess you could say it's hedged because I have short puts on MSTX and I also have, covered calls against HIMS. So I don't know. Like I always hedge my portfolio because I have PTSD from back when I was a day trader and I lost all my money.
Oh, you blew an account? Oh, but probably
I blew
one.
many. I blew many accounts.
Yeah.
Of my hard-earned money too. Like back whenever I first started, like dude, whenever I first like got into the workforce, like pilots, whenever they first start off, like in their starting jobs, like I was making bro like nothing. Like I was very broke.
Yeah, but that's like
Um,
for all pilots, right? At first,
what was that?
that's like for all the pilots starting off, right?
Yeah, yeah. In the pretty much in general, like when you get out of school, so like pilots are back, like the stuff's like backwards. Like whenever you finish school, you basically start off like teaching. Most people do as a flight
Yeah.
instructor. So like you get out of school and then you start teaching. When I was a flight instructor, I actually like made more doing that than what I did after, but I was making probably like I don't know 40K
Yeah.
a year. And then
Hmm.
whenever I flew cargo during COVID, I was making like 30K.
No
Um,
way.
so I was pretty like relatively broke for the most part in comparison to what I am now, obviously.
Yeah. Yeah.
But like I was plopping like thousands of dollars into a portfolio, and I was trying to make my way. And over those periods of time, like I was eating like ramen noodles and stuff, bro. Like I didn't have money to like go out and eat at like
Yeah. Yeah.
nice
Yeah.
places. And I was plopping thousands of dollars into portfolios, and I was trying to like make my way, but I
Yeah.
kept blowing like account after account after account, and those mistakes that I made have made me who I am, have the
Yeah.
patience level of what I am, and the trader I've become. And I'm thankful for the times that I did blow those accounts, because if I didn't learn from my mistakes then, I would definitely probably would be doing the same stupid bullshit that I was doing then now.
Yeah.
So
I used to have a similar story. I used to like scalp options, like day trade options, and I never felt more depressed in my life. It was like the most
yeah.
stressful thing, and I hated it. Like
Uh-huh.
there was so many times where I was so close to just closing all the accounts because it wasn't worth it. It's like you're just gambling at that point.
Yeah. Yeah, for sure. Let's see. How would you hedge with Nvidia and SoFi puts and with 3% of the port, or what percent? Well, for me, I would hedge it by. It depends on how many shares you had of Nvidia and how many shares you had of SoFi. Um, with me, I would hedge them. If I had 100 shares of them, I would hedge them by selling calls against the shares, and then I would also sell puts on the other side. But again, I don't know enough. I don't know what your portfolio value is. So if you have a good sized portfolio, then I would say like yeah, make a covered strangle, have sold calls, and then also have sold puts. That way, if the market goes up or down, you're at least going to be right one direction, and if it goes sideways, you're right both ways. If you have a smaller account, and smaller account being anything probably less than like I don't know $10,000 or something like that, then I would say like if you have Nvidia long shares, you could like buy a single naked put option for like a 90-day expiration to hedge your portfolio to the downside. That's something that you could do. There's many ways to attack that, but because I have a bigger portfolio now, I hedge my portfolio via selling puts and selling calls. Okay, 150K. Yeah, so if I had 150K in my portfolio, I would create covered strangles. That's the way that I would hedge my portfolio. Like if I looked at Nvidia right now, like let's pull up Nvidia's chart. Yeah, you could see that I usually go to the 1 week chart. It's a pretty good way of saying, if it were me, I would probably at the top of this Bollinger Band here, which we're right about there at about one, as we approach the 140 something level, I would think about selling a call option against my shares. Um, That being said, whenever it was down here, I probably would have sold puts for sure when it was right here, and I did sell puts. Whenever the market tanked, I sold puts against my stuff. Now, if you wanted to and you were late right now, you could sell like a 45 to 60 day expiration put option, maybe somewhere at the middle of the Bollinger Band, around like the mid 120s level, and then sell a call against your shares in the upper 140s. That's probably what I would do. That way, at least one direction, you're going to be right. Whether it skyrockets up this way, you'll realize the short put, and then if it falls down, you'll realize the money from the short call. And if it goes sideways, then you're right both ways. That's what I would do, and how I would hedge my portfolio that way. And I would do the same thing with SoFi.
I agree.
Yeah, let's see. Stands. What are the money ranges for being a pilot? I'm a commercial pilot, so basically, like the commercial pilot money ranges, the salaries industry wide are very like all over the place. Basically being like a commercial pilot or being at like FedEx or UPS are probably like the top places to be a pilot, unless you fly for like a Fortune 500 company, and even that is about the same as a commercial pilot most times. So the money ranges, like they can be as low as for a flight instructor, like $20,000 to $30,000, and on the upper end, like I've heard of guys clearing close to $1 million a year, and you can honestly probably even make more than that. And that's on the upper end of things. But then they also don't factor in the fact that like in the commercial airlines, they give us an 18% contribution into our 401ks. And that's with zero match. So that's putting no money in. That's just them taking 18% of your paycheck and plopping that into your, that's just them plopping that right into your 401k. Now, once they do their max employer contribution amount, then they put it onto your paycheck. So that part doesn't get figured in. So if you're clearing close to $1 million a year, you're probably getting about, another 300K, maybe even more than that on top of that if you're because of that employer contribution. So the money is very, very good. The money is very, very good. Currently, I have sold calls on the shares and sold more customer puts at 125. You wouldn't do anything more than that to hedge the downside? I mean, bro, honestly, like you could, like you totally could, like you could 100% look at this and go, you could buy, you could make a 1 or 2% of your portfolio, or maybe like 1% portfolio value risk against these Nvidia. Like whenever you feel like Nvidia is overbought, once it gets to that overbought territory, sure, buy like a 1 to 2% of your account portfolio values worth of put options on Nvidia. I mean, you could totally do that. Now, would I do that? I don't know. Maybe, maybe not. Probably not, because that's not the strategy that I use. I feel like by me selling the calls and selling the put options, I'm already hedging myself enough. But if you wanted to, totally, you could absolutely say, you know what, I would get rid of Nvidia at 145. And if you bought a put option at the 145 strike for 60 days out, the DTE, I would do at least 30. I would do like 30 to 90. Yeah, if you're only risking 1% of your portfolio value to hedge yourself further on the put side, then I think you're fine.
Did you renting? Did you like General Mills or no at this price?
Yeah, I like it. I like the chart a lot.
You would go long on this?
Yeah, for sure.
I just want to see if my thesis is like makes sense with other people
Yeah,
too.
if you go to the monthly, it makes a lot more sense on the monthly chart.
So I have this app called Stock Screener. I
Uh-huh.
don't know if I told you about it. And basically, how I found out about General Mills, I was like going through random stocks, and then I just like it's like an AI bot, right? So you just tell the AI bot like, "Oh, what do you want?" I put undervalued stocks. It is number one on the list, and then I go to the community, and then it just like it's a bunch of thousands of people like tweeting about it, kind of about General Mills, and then someone put it's trading at the lowest like earnings multiple in over a decade, like
Mm-hmm.
since 2018, and like so it's like at a clear support. So like it has to bounce. There's no chance it goes lower. It has to.
Well,
History.
obviously people like it here at this level because you can see it fell underneath that 200 EMA and then it recovered right. It's right at the 200 EMA right now.
I don't know if I told. I added more. So I put 25K in the calls, and then it dipped a little bit more. I added another 5K, and if it goes to $50, I'm gonna add another 5K because like I want to keep. I hope it goes down. I want to keep adding. I really want to make like the most from this trade as I can.
Yeah, I mean, I honestly don't know if it will because it's right. It's right at the monthly chart 200 EMA. I mean, the last time, like, think about it. The last time it was here was in 2018.
That's what I'm saying. Yeah, exactly. It's crazy, bro.
Like, the last time it was at the 200 EMA was in 2018.
Are you gonna play this or no? You're gonna wait.
I don't know. Well, let me look at the option premiums. So another one of my rules is I don't sell put options on something unless I can get at least up 1% per week out of it. Um, and I also don't like the fact that it doesn't have
The weeklies, I know. That's why I just bought the leaps. It's better just to buy leaps on this.
yeah.
The premiums are great though. If you want to buy leaps, it's cheap.
5, 10, 15. Yeah. So like this right here, I mean, I wouldn't sell puts on it. I would probably play it differently if I would, because I can only get like 1.5% for 22 days.
Yeah, it's not worth it.
Yeah, it's not worth it.
If you go to 2027 and the 50 call, those are the most active. That's the one I'm in.
Yeah, let's look at this too.
Oh yeah, I forgot you used that one, the Trady Ticks.
Um, let's see here. Let's see. Look at the dealer open interest.
Hedge funds bought 5 million shares, by the way. And Jeffries and all the institutions are adding.
What happened? What did they do?
Hedge funds bought 5 million shares in Q1 of this year for General Mills, and Jeffries and all the big institutions are buying.
Oh, really?
Yeah.
Why does it not show?
There's not much activity on it. That's why. It's not like Tesla or, Nvidia.
Uh-huh. Huh. Yeah, this is giving me almost nothing. Let me see. Yeah, I mean, I have to look at it more. But I do like the chart, though. Like, I think the chart's really good. I think that would be, a good place to buy it for sure.
Yeah, I like it.
Am I selling cash secure puts? No, I'm selling puts on TSLL. Well, I did. I actually closed those out today. Let me see. TSLL. Let's see. TSLL. Yeah, I'm up like 3.5K on that position right now. I just closed these out today. $380 in profit. So I think the only one technically is Tesla via TSLL. I'm selling puts on so far right now.
Wait, so renting after you like you don't want to. So basically, you just want to end up trading full time, right? You don't want to be a pilot anymore.
Well, it depends, because like some guys, like I would totally keep being a pilot if by the time, like I've already told myself, if I'm not by 40, right now I'm 26. Okay, so obviously this is 14 years away from now. If by 14 years away from now, I'm not in 100% complete control of my schedule, like, because, I want to start having kids and stuff, like, relatively soon, within, like, the next couple years.
Yeah.
5 years or whatever, and I don't want to be gone, like I don't want to be away and all the time and stuff like that, and like, oh, dad's got to leave, he can't be at your birthday,
exactly.
Like that would like break me to have to be
100%.
like that. So I've already told myself, if by 40 I am not in complete 100% control of my schedule, I'm gonna leave. Exactly. But I do think 14 years from now, I 100% should be, but you never know, like with market downturns, who knows, maybe another like 9/11 thing might happen. I might be out on the street again, like looking for a job. Who knows? American Airlines or United Delta could go bankrupt, and then I could be out of a job too.
No, of course, of course. It's
So
good to be prepared for the worst.
yeah, so but 14 years from now, I should be like in 100% complete control of my schedule and be able to not work days, work some days, go to Europe, or fly, be in Italy and then be off for a whole month or whatever. Because like once you get to a certain point, like once you get enough seniority, you work like once a month or like once every other month.
Yeah,
And if they're
100%.
giving you full pay plus an 18% contribution and flight benefits, you might as well just stay.
Yeah, there's no point in leaving at that
Yeah,
point.
like you shouldn't even leave like if you're already
Exactly.
at that. So that's kind of like why I'm like would I leave if I'm not in control? Yeah. But if I'm in control and I'm getting all these benefits out of it, then I might as well just stay.
Exactly. There's no benefit of leaving. Like,
Yeah.
but definitely you should, if you end up going to, because I was just in Europe. I went to Paris, but like I didn't really like Europe that much. The best place to travel is Dubai. I'm
Yeah, we do
telling you,
flights
bro,
over there.
it's the best. It's just so far, bro. It's 16-hour flight from Miami. I
Yeah.
hate.
Yeah, that's good for us. Longer flights mean more days off for us.
Oh yeah, true, true.
Yeah. Do I do zero DTEs and all? No, I don't. Not anymore. I used to. I used to
Me
day
too.
trade zero DTEs, and
Me
I
too.
don't. I don't trade them anymore. Just because I don't want to get. It's like smoking crack.
Yeah.
Not that I've ever smoked crack, but
Yeah.
uh, you know, zero DTEs are very. It's like a drug.
You get rich quick.
Yeah, it's like oh, you can make a couple $100 real quick, but at the same time, you can lose a couple $100 real quick. So.
Yeah. Bro, you know how much I lost with credit spreads? I lost so much money with credit spreads.
Oh, really?
Oh my God. I swear to God, I've lost so much money. That's why I don't do credit spreads anymore. I lost 60,000 in one day, a year and a half
Why?
ago. This is the beginning of last year when the market was ripping. I did QQQ call credit spreads, and it just went against me. I lost 60,000 and I wanted to quit. And then I'm just like, then I moved from credit spreads to just selling puts and calls. So I made the money back from selling puts and calls because I was using all my account. You know what I mean? That's the only way I was gonna get back fast. I was like, I want to get back fast. And
Yeah.
then once I got back to where I was, recovered the 60K, I just went to naked calls and naked puts because that's like where you make the most money.
Uh-huh. Yeah. Yeah. Yeah, yeah, I don't know. Like if I'm really bullish in a company, like kind of like how I am with DR Horton right now, like
Oh
I
yeah.
I would honestly rather just buy naked call options and not sell puts against it. Because
Mhm.
if I sell puts against it and acquire shares, I already know myself that I'll end up selling calls against it and then
Yeah.
they'll be in the money and like I'll still get the win, but it won't be as profitable as it could have been.
So
So,
why
I don't
why
know.
don't you do naked calls and naked puts?
Why don't I?
Just do leaps. It's safer. It's actually the safest bet to do, honestly.
Well, I have been. I do. I right now I have open leaps on Grab.
Yeah, but like, what about the other positions? You would like imagine how much more you would make if you would have done it like on Bros or Kava or any of those.
Yeah, well, I actually ended up selling Kava at a massive gain. I sold Kava at its peak. I sold Kava at $168 a share.
No way.
Yeah.
Yo, you timed that perfectly. Oh my God.
Yeah. Well, that day it ripped up like 15% in one day.
And you're like,
Like,
it's too much. Yeah. At
mhm.
some point, no matter how good the earnings are, valuations matter. And if it's ridiculous, that's it. You get out. Like Palantir, you have to get out of that. Eventually, it's
Yeah.
gonna come down.
Well, like that's what I've always said. Like if you're if you're sitting there and like looking at your phone and willing to take a screenshot to show everybody on Twitter like how much you're up on a position, it's probably time to scale
To
out.
get the hell out, bro.
Yeah.
I and another thing I agree with you on is like the rich people, the real rich people, will never sell a course.
Yeah.
They will if they're making millions, they will never sell a course for 299 because they won't share the secrets. They won't share what made them rich. They don't need extra money. A lot
Yeah.
of people that sell courses, that's their income. Is the selling courses.
Yeah, like I just don't like I do this like I do like these live streams. I do YouTube, I do Twitter, like because the stock market's a passion of mine.
Yeah, me
Um,
too.
Not because I'm trying to get some dude that's got a $500 portfolio to give me $5. Like I feel like that's worth.
Exactly.
Like I'd rather them use the knowledge that I have and the mistakes I made to turn $500 into $500,000 and then thank me later. Kind of thing.
Exactly. And my two favorites in this industry are you and TJ. You guys are the most transparent, honestly.
Yeah, I try to be. I try to be as honest as I can. Like, I mean, I'm showing my portfolio exactly what I've, made, lost. So,
Exactly. So many people like say so many things, share opinions, but they don't even show their accounts because they're so embarrassed. Like
hmm
even when if I lose, I share. I share everything. I don't care. I mean, there's no point of not sharing.
yeah, no, for sure. Well, a lot of times when you lose, that's when you learn.
Exactly.
Yeah,
It's
like
you. You
you.
don't lose. You either win or learn.
Yeah, yeah, for sure. Yeah, definitely. Definitely. Well, I got to go, man. I'm going to go to the, it's about an hour on the live, so I'm going to go to the gym. So it was nice talking to you guys. It was great having this live stream, this portfolio update. Like I said, tonight I'm going to make that video on the
Google.
spreadsheet.
Yeah.
And I'm going to put the link to the spreadsheet on that YouTube video. And then if you guys have any other YouTube ideas or videos that you guys want to see, feel free to DM me or, just, make a comment on one of my tweets and say, hey, can you make a video about this? And then I have a notes thing on my phone right now of videos I need to make. So whatever videos you guys need, I'll make them. And anyway, guys, it was great having this. So see you guys later, and I'll be on X throughout the rest of the day. So if you guys have any
Appreciate you,
questions, feel
bro.
free to DM me.
And do more of these lives. It's fun, bro.
Yeah, bro.
Appreciate it.
Yeah, for sure. For
Fun.
sure, man.
Fun. I like it.
Yeah,
All right, bro. Enjoy
absolutely.
your workout. I'm also going to work out.
Sweet. All right. Thanks, guys. All right. I'll see you guys later.
Peace.